Hi, this is Yeho. I'm Mac Option Trader. Today is March 28, 2026, 10:24 p.m. Japan time. Let's take a look at the market. So the Nikkei closed at 53373 on Friday, but futures dropped to around 51500. That makes me a bit uncomfortable going into next week. Volatility was high during the day, but closed at 33.32. Payout is now 19.75. EPS is 2702 yen. EPS has been falling quite a bit. It was around 2850 before, so we are lost about 115 yen there. On energy, even with the Hormuz Strait situation, electricity prices are still relatively stable, about 14 yen per kilowatt hour. Seasonality helps. We are entering spring, so demand is not that strong right now. So for now, energy prices are not reacting much, but the key question is how long this situation lasts. What concerns me more is USD JP are hitting 116 and Japan's 30-year yield rising to 3.69%. This could be reflecting higher oil import cost and concerns about Japan's fiscal situation. So I'm watching the bond market closely. Looking at the US, S&P is at 6369. Momentum is clearly slowing. VIX is now 31. Move index at 111. GBZ is the gold volatility at 45. So overall, risk is building up. Gold is at $449. It went up on Friday, but still feels weak. Normally, when GBZ rise, gold goes up strongly, but this time it's different. My interpretation is the home issue is starting to act as a constraint of AI-driven productivity growth, and if that narrative weakens, the bullish case for gold also weaken. So this does not change my view from last week. Bitcoin is around 65900, also slightly down. So overall, there are quite a few warning signs in the market. About Monday, I talked about the possible Black Friday last week, but it did not happen. We rallied to around 54000 points and then dropped again to Friday. So much starting Monday, there's still some risk. But honestly, it still feels like the market is rushing. So I don't think a full Black Monday happens this time easy. Still, this is the second week of the tension, so we need to be careful. Also, the Hormuz situation, there are mixed signals from Trump and from Iran, and honestly, we don't really know what's true. Military tension is real, so we need to keep watching. Now, shifting a bit, I've noticed something interesting recently. Vegetable price in supermarket are finally going down. From 2023 to 2025, they are quite high, but now there's clearly dropping. My hypothesis, this is linked to reversal of consumption patterns. Over the 3 years, stock market was strong, wages are rising, consumption is increasing, especially dining out. So restaurant consumed more vegetable, which reduced the supply to supermarket, pushing price up. Now it's reversing. Inflation is high, yen is weak, energy costs are rising, so households are becoming more cautious. That means less dining out, less demand from restaurants, more supply to supermarket, lower vegetable price. So what we are seeing now is a deflation. This inflation is in food, but there's an important point. I don't think we are going back to full deflation. Instead, the structure is changing. Because of AI is increasing productivity per minute. So anything that becomes easier to produce will go into deflation. But things that don't scale easily, like construction or real estate, will stay scarce, and those will continue to inflate. So going forward, we'll see both deflation and inflation happening at the same time. This is the key. Prices are no longer unified. They are splitting. Each asset moving in its own direction. So as an investor, we need to identify which assets are going to into the deflation and which are going to inflation and position accordingly. That's it all for today. If you like this content, follow me with a long bit mindset. See you tomorrow.